Good evening. Welcome to Options Center. It's Thursday, 10/26/23. Welcome, everybody. If you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. Thanks for joining us. We've got a couple things to talk about. We're going to go through SPY on multiple time frames from the monthly down to the 65, and then we'll check out, if we have time, we'll check out maybe the VIX and QQQ. But our main point today is trusting yourself and the work that you do. Okay. We put in all this work to find key levels, to find where most traders are trading, where they break even, support, resistance. All those things mean the same thing in a different point of view. And a grave mistake I have made the past 2 to 3 days is kind of fight the trend. You know how I say trend is our friend? I've been fighting it because of one factor, and that one factor is a big deal today. It's something I had talked about in the beginning of the week and last week about QQQ, specifically the third wave, the structure, Elliott wave structure, that third wave. When we get there, I'll show you the third wave cannot be the shortest wave. That is the case now. It is the shortest wave, so that is invalid. We have a very bearish structure, so make sure you stick around and figure out, and you see what my Elliott wave count is later. Stick around. This is going to be a little bit lengthy video, so if you need to speed through, there's going to be certain parts I'm going to show the Elliott wave dominant thesis that I've been going through, but I had trouble following it the last couple days. Okay, and we're very bearish now. We're still looking for that bounce, but that bounce is gonna get sold. That's the important part. Okay, so here on the monthly time frame. By the way, don't forget to like the video. And if you could support in any other way, go down the description. We have this consolidation area after we had our initial reversal down to the 50-month simple moving average. We had consolidation. We made a ascending triangle. We broke out from that triangle. That back testing, this area right here, it's this zone that we have gotten to. Call it a zone here because it could have, we had some reactions a little bit higher. We got to the zone. We got right to the 20-month moving average, right at this ascending triangle breakout area. We're retesting. I said this in past videos. That's natural. When price action breaks out, more of the times, most of the time, price is going to test that to make sure that's really what's happening. It's going to be a fake break or it's going to continue higher. So we're at the pivot point. To put it simple, we're at the pivot point of we go higher or we go lower. And I think we bounce and head lower. So we're following that 8 EMA, that trending indicator in the long term here. That's what I was telling you about. Get underneath it and trend underneath it. Then we're trending over it. And now I believe this trend is going to continue in a little bit more rapid way. I don't think we're going to get back above it, not for any length of time. We're definitely not going to close above it. I'm sorry to say definite. Nothing's for sure, but I'm being strongly opinionated about it when I speak like that. And so we should follow this trend. The month should not close above it. We should continue lower to head to these lower levels, break new lows. Okay, on this weekly time frame, give you a different point of view. Okay, we had our pivot. We stopped there for a moment. Again, I was fighting it. I thought we were going to bounce from there and then head lower. We did not. We broke down from there. Very strong negative week. All right, we're getting right into that zone. Sure, it could inch down just a little bit more because I have that lower point of the zone. But you always gotta think. it's a zone. So you have all this room here. This whole room, we're inside of it. We can poke in there and head back. The week is not done. Tomorrow, if we have a very strong day, it could end up being a doji candle. Okay, I'm kind of looking for that being the case. I really would like to see a rally into FOMC, and then FOMC be the because I have time triggers on that day, time relations. I want to see either A, we're heading lower and into FOMC, somehow the Fed says something correct and we pop. Then we get that pop. Or the more likely situation is we're right into this support area, the breakout zone, and we get our bounce into FOMC, and then we start heading lower. And remember, it doesn't have to head lower on FOMC that day. That day, they like to trick you. They like to send you one way, and then overnight or the next day, the real move actually starts to happen. Okay, we'll start to look at structure a little bit later on. But you see, we have the 1-2. 1-2 is now the dominant thesis. Okay, 1-2, 1-2. Expect a little bounce, maybe back into the ADMA. You know, this is a big point here around the 428 to 430 is what I'd be looking for. Anywhere in that zone, that's where I think we would reverse. Headed into the daily time frame where the trend is our friend, and that was what I was not doing earlier this week. You know, that's the mistake that I admit, and I was fighting the trend. So we're back into this consolidation area. Yes, I thought we could have bounced off of this 415, 416 area. Again, we're right into that zone, right on top. Instead, what I think we're going to do is we got into it. We got right to the middle. You see where all of this trade action is? There's a lot of volume right in the middle there. That's where we stopped. We also have a support area, a descending pivot. We're right back at that. We had that little bounce around the 200-day moving average, and we just put too much emphasis on the 200. We traded around it, and then started getting some real red days there. So again, we broke down from the 8 EMA, which is our trending indicator. I did not follow that 8 EMA, did not put enough emphasis on the trend. Now we're far away from it, so naturally we're going to bounce back. So with the snapback, I could imagine, I can't promise, but I imagine we go back to the 20 simple moving average. That's the natural point. Sometimes you just kind of poke through it, and that's around that area that I was talking about, the 428 to 430. Okay, so that's the 20 simple and that resistance zone up above. Okay, let's see if we can find something here. We had our reversal indicators. Same thing. We pointed out yesterday, just went a little bit lower, but yes, we have our signals, all 3 signals. This one even started to turn up a little bit. Down here in the Williams R percent, we have looks like it wants to start heading up. All right, so we're looking for that reversal. The McCullen oscillator, we were talking about that. Positive divergence 3 times. 3 positive divergences coming from here, actually. Okay. So I'm going to go over to the Elliott wave. This is our dominant thesis. It was our dominant before, but now it's confirmed. It's not confirmed on SPY. It's QQQ that's given us that hint. And I'll show you here in just a minute. So what I'm looking for is this in the white. 1-2, 1-2. And now it appears as we get down to 65-minute chart that we should be just about done or done with this. I don't see a reversal candle. I do know that we're gapping up. That doesn't mean anything overnight. We have PCE in the morning. Maybe that gaps us down, and then we get a green day to finish off Friday. And then we would certainly have follow through. If we have a green day tomorrow, we're going to have some follow through on Monday. Okay, and hopefully throughout until FOMC, and then maybe that'll be our reversal point that we're looking for. Again, that if you see that former 62% retracement from the highs, that's right there at the 429 area. That same area I'm talking about, where I think we could bounce to. We got right into that consolidation zone. That's the former 50% retracement, which was our breakout zone as well. So it's right where we're at with all that momentum. You know, clearly we're pushing through it, and we are likely to snap back out of it as a bear trap. All right, let's go to, before we move down to the lower time frames, let's go to the QQQ, kind of clear things up here. See if we can get the Elliott wave action here. We have, let's see, we're labeled as a 1-2. I haven't been on this one in a little bit. 1-2. And the important thing is, it's labeled just like SPY. So 1-2, 1-2, and we're heading into a minute 1, and we're gonna snap back for 2 at some point, either tomorrow or Monday. I think tomorrow's the day, and then start heading lower. But the important thing is this wave 1, I'm not going to measure it, is larger than wave 3. Okay, that's just a given. We already did it, and I want to show you we did this in a couple videos. Wave 3 cannot be the shortest. And so when we actually hit it overnight in the in NQ on the Nasdaq futures. So I actually had this in mind that this is the bearish move now. This cannot be the leading diagonal where you get a bigger snapback and then head down. This is only a 1-2, 1-2, and then a 1-2, maybe a more shallow. We'll see. And then start heading lower. But that 100%, we made a larger move on this supposed wave 5. It's no longer a wave 5. It's just another wave 1. Okay? So I hope that clears up that point. That's a big deal. That was a breakthrough today. That confirms our primary bearish thesis. So let's go back to SPY. And it's not to say, it's unlikely, but it's not to say that, not the one I wanted. It's not to say that, SPY can separate from QQQ, and this can be a 1, 2, 3, 4, 5, while QQQ is a 1, 2, 1, 2 setup, and this has a deeper pullback, while QQQ has a more shallow pullback. Okay, that can happen, but I like to keep the two in close scenarios. This is already stretched out more than QQQ. I do believe that tech is taking the lead. So after these ones are cleared up, and we already had signs of it today, the last few days of this week, that the Qs were relentless. Just 2% days. It seemed like every day it was a 2% plus negative day. And so you see that it's starting to stretch out more. You see the Qs are taking over on the downside. That's natural. That's what happened when on the upside. In the Qs, especially on this move, but the Qs are a lot more stretched out and reached a lot higher. So it's just doing that now on the downside, being the leaders, the tail wagging the dog. Okay, let's move down to the 65 minute. So, again, let me pull back out here. We had to redraw this. Instead of a wedge, we drew it as a channel. We also drew this as a channel instead of a wedge. It just started to extend and to extend. We were up here about 420 is when we started making our mistake. 420 is when we started to say, hey, we need to bounce soon. We made our low. We were happy. We thought we had because we had slight divergence. We were happy. We didn't call off, we took some hits and we just kind of rode it down and added onto our position. This is not a real typical way to play. It is a strategy. It's not, because if it kept going, I mean, you're just going to keep losing. Okay, so we had our point of control. That's our volume shelf. It's our options expected move for the week. Everything pointed that we were going to this price level. My optics would not allow me to see that because I drew in wedges and drew in areas where I said price couldn't really go down to. So my optics actually convinced my mind. That's what technical analysis is. Convinced my mind that we couldn't get down to the obvious point of control on the higher time frame. And look at this. Let's just be frank here. This is what I had set up early. My God, I mean, I had this here. I think when we had the back test is when I drew this. On the middle of October, a couple weeks ago. We have our head and shoulder, left shoulder, head, right shoulder. We had our neckline, broke down, back tested, and had our measured move. I didn't shape this before the video. I didn't put this here before the video. I told you in the video that I had this in here. I had this at a just 1 second. My wife's calling me. Okay, sorry about that. I had to take that call. Just wanted to reiterate this head and shoulders setup, back tested that neckline, and came right down to the measured move. It doesn't mean everything has to be exact, but that is just traditional technical analysis in its greatest. So supposedly we have a 5-wave move down. We're finished complete with this move at the 412, which is also the point of control. I can show you that as well. I showed you with the line, but let's do the volume profile. So the volume profile right here, this huge node where all this trading was taking place back in the past here, we came right down to it. That's where we had our eye on it from way up here. From our standard deviation move from the top, but we just didn't have belief. I know that was only down at this point. We didn't have that belief, but it's still, just to have that conviction to that point would have been much more prosperous there. Okay, woulda, coulda, shoulda. Okay, let's take this off. And let's go down to the 65 again. So with our 65 minute, we already did the traditional. We're down at the bottom of the channel. We have Elliott wave. So let's do our Elliott wave count. All right, let's clean this up a bit. I think I did some of it already. Now, we have in the white, 1, 2. In the yellow, 1, 2. In blue, assuming that this is the low, and that confluence of support that I was talking about. 1, some sort of ABC correction. These are not in the right place. This could be the A all the way down here. It could make it a larger A and then come down and come back up. So ABC, which should be pretty sharp. I'm looking for 2 things. I'm looking for a sharp zigzag, which is more common, for a wave 1 into 2, or if time needs to be wasted, more of a 3, 3, 5 flat pattern. And that can work out in a couple different ways. It can, price can come all the way up here to 50%, come back down to make a higher low, and then come all the way up to the 62%. There's different things that can happen. So I got to keep that in mind. My theory, and hopefully this won't get in the way of any of the price action, is that we get our sharp zigzag, nice big move tomorrow, a pullback, maybe gap down on Monday to green into Tuesday, and then FOMC, however this goes, into Wednesday, FOMC, getting up into these reversal areas. Okay, so that's about 15 points away. It's not a huge, but it's not going to be a straight up and down, not straight up and down. It's going to go in some sort of zigzag or flat. So after that, we're looking at really starting to crumble, really, if I should say it right. Really starting to crumble. So if we have our 1 in, what we could do, and let's get that out of there. This is our 50% retracement from highs, all-time highs to lows. So these are going to play a factor in just bounces. These should not really hold. 62% might hold up. We'll see when we get there. But for now, we take the top of this blue one. We take the top of the wave 1. We're going to add our extension tool down to the bottom of wave 1. So that gives us the length of wave 1. And then I'll put it to the 50%. Just assuming we get to the 50%, we might get to the 62%. And maybe, it could go a little higher, but I think these are going to get a little bit more shallow. It might only make it to the 382. The lower this move takes, you have to be careful as we start to get into these really minute waves. They can move quick and sharp. They can be shallow as well. The 382, we're looking at, we'll start, looking at things at the 382. But let's just assume right now the 50%. This is just a big assumption that price gets to the 50%. Let me get rid of all these. I want these in the way. And since this is in the blue, I want the target. I'll have to adjust it as we see the wave 2 go into place. That's going to be our next target. Okay? If we make it up to the 50%, watch out, because this is going to be a 5-wave move down here, and that's going to be relentless. Okay? I think this move is going to be pretty sharp. Heading up here, it might not even make it that high. We have our time factors at 10:31, so October 31st, November 1st, on 3 different time frames, from high to low, from low to low to low. We have a lot of stuff happening here, okay, on that date. So we're looking for a move back and then our real move to the downside. So save your money. Trade lightly. Get up here and look for, a couple few week swings. So I'll put on short-term swings. You can do a duration. It doesn't matter. But, there's strategies. The short-term swing, I'll post the video at the end or a card up above. And you get into these zones, maybe start around 382, at least lighten up at 382. You can put that on there. And just know that it's not likely. That's not a typical spot for wave 2 to end, but we're really starting to get into this move here, okay? So if we're only up to the 382 and it's FOMC, just be careful. It just depends where we are when things happen. It could be here for FOMC and it just spikes up from something they say and then boom. All right, I don't have any bullish plays here. I don't have, there's a 5-wave move. That's a motive move or a 1-2-1-2. There's no other move unless we get one more low and somehow we can manipulate that to be a bullish play. This is not bullish. So this next move is going to be quite furious. Okay? That's confirmed. It's confirmed today, as of today. So I can take these retracements. Retracements don't matter anymore. All right. Let's see. Qs. We'll go to the Elliott wave on the hourly time frame. It's the same thing. We're looking for, simultaneously, we're looking for some sort of pullback. And if one makes it higher than the other, well, you know, it just depends. If one makes it to the 50%, but the other is at the 62, just caution. They don't both have to make it to the same time. Okay, going into FOMC. 1-2 in the white, 1-2 in the yellow, and now 1-2 in the blue. In this measured move, if this low is in, if we gap down and then up and then head up, then we'll adjust the target. And we're just assuming we might get to the 62. We're assuming the 50 because it doesn't even have to get that high. We're starting to gain momentum to the downside. So we want to get rid of the excess stuff here. Just keep our screen clean. And then our target to the downside is down here near this 300 area. Again, that can adjust. If you only make it to the 382, then that target could be down to the 303. It's not a huge difference, but we'll have to adjust to see when we get our reversal. So right now we're looking at 307. We get up here to reverse. Give some time on your, maybe a month out on your puts or short plays. Maybe a little more if you want to be more comfortable. And watch them go. Because this thing's going to be relentless. Those bounces are going to be lighter than these bounces. These were holding up for a day or two. You might not even see some of these for a bounce overnight and then, way lower the next day. And that gets us right into some consolidation zone here, right at the bottom of it. These might line up just a little bit better in the future, but we have some support right here that kind of coincides with it as well. So we'll have to pay attention to that in the future. All right, and then on the weekend video, when we get to the weekend, we'll do a lot more on the higher time frame to see where these kind of coincide, just like we did for the point of control. Getting into that point of control today, we really, really did a lot of work to make sure that we knew where price wanted to go. And then as we got closer, we kind of shied away from our conviction of where price was going to be, and it ended up right where it needed to. So happy about that it ended up where we wanted it, but we did not make money off of that. We actually lost money going into the point of control. All right, wedging up here, we made lower prices in the SPX and QQQ, did not in the VIX. It's starting to veer away. We're getting a lower high. We think VIX is going to come back down. Maybe we come all the way down. I don't know. I can't imagine we come close this little gap here. Maybe we just get our higher low for the VIX. Maybe down to the 15. I doubt. Maybe 17. It's just a guess. I have nothing to really show where it needs to go. We do have a gap here. So maybe that's where that would be a good reference point to close this gap. From the close here, we gapped up. So we have a nice gap to close there. I don't see any other gaps right offhand. I lied. We have one right here. So we want to try to close these gaps. Maybe close this one. That would be really fast. Maybe that's where we get our A, B, C. And I'm thinking inversely on the and the indices, but indices. So maybe we try to close this gap. I think it might be important to look at the daily, because looking at that daily time frame, we're holding above 19, but I think that we might get lower. Maybe back test the 200 moving average. Getting really close for this 50 to cross the 200. That would be pretty big. And with all the time moving, as long as price keeps staying above this 200-day moving average, this 50 is going to keep rising against it. Okay, so if we come back, retest it, and that's where we make a lower high in the indices, and then start heading back up, that's where we could start traveling, and the VIX should really start taking off. That should have this 50-day moving average really starting to move, because we're starting to erase some of these. I'm not going to measure where, how far. Actually, I might as well just do it while we're here. We're looking at 89, 50, 50. So about 50 bars is right here. So we're taking off a lot of this. All this down here is starting to come off. And then all of this is going to start coming off, and the moving averages really going to start creeping to the upside. We're going to get a cross, and that's going to be pretty devastating for the market. So all this information is already off. We're looking at, some of these highs. That's actually good information, but really, if we try to measure it out there, about 20 more bars, so about 20 more trading days, and we should have all of this lower price VIX off of the moving average, and we should be well crossed by that time. We're already close. We should be well crossed at that point, especially if price action stays up here. Okay, that's what I have for you today. I know we had a couple of earnings. We'll get back to some of those starting tomorrow. It's been a long enough video. Thank you. Don't forget to like the video. Appreciate y'all being here. Well, have a wonderful night. We will talk to you tomorrow.